There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Okay, welcome to the Merry Christmas edition of the Auvoria Prime Weekend Market Strategy Session. I do this every Saturday, somewhere around 10:15 a.m. Eastern Time. We do this for the Auvoria Prime subscribers, clients, students, anybody that cares to view. My name is Steve Vetterl. I'm the firm's CMA. I try to act in a protective mode, occasionally taking a victory lap, as I will this week, from our Get Out of Equities call on Monday. I actually had a number of clients that, as I switch over to the system here, that it came in on a pretty big rally in equities for at least a lot of their portfolios, and we were basically sounding ridiculous bells on Monday. Get out, take the gift horse while you can, and enjoy it. Now the market's 4% lower, and we're happy to be in a protective role for our clients. So that being said, this is last week's news. Just want everybody to be clearly aware of what is first and foremost. Fed going 50 basis points. I've posted multiple pictures of how many raises there has been this year. Pretty unprecedented. There's a lot of people think it's too much. If you take a look at the people I follow on Twitter, at least the big ones I talk a lot about that are very generous with their time, they don't really need to be on Twitter. Mostly the people with a billionaire behind their name and or some sort of good hedge fund person. I think it's too much. So remains to be seen. What we can see is the CPI news that came out last Tuesday. Okay. Now, as typically the case, you oftentimes, even in a bear market year, you've seen a significant Santa Claus rally up until this week. So I think that was a big surprise for a lot of the equity holders globally, as that the meltdown. And that's where sort of that window dressing, as I like to joke, by institutions can really come and just slap you in the face because they've absolutely pulled the rug on retail this week. So know the signs, listen to this cast if you wish, because a lot of times the signs are pretty prevalent if you know what you're looking for. I do think this is a better number, obviously, but not by any measurable stretch. Okay. So let's go to next week's news. It's basically going to be mostly non-existent, but I think it's important to see what's going on. It's a holiday week, so is the week after. That's why you're seeing this is a very light calendar next week. I don't really see anything. Obviously, want to pay attention to what's going on in Canada, right? I would imagine this number should be lower. How much? Is it going to make any movements in the Canadian dollar? It could. It's about the only thing I'd be on alert for next week. Honestly, if you don't need to make money in the markets, unless you've been really short equities in whatever form, right? Options, futures, ETFs, stocks themselves, or, just short some sort of, or betting on the down move and some sort of MT4 like the US 30, but a good week. So don't press your luck. Don't feel the, pressure. Let your hearts not be troubled, so to speak. I typically do not trade the last 2 weeks of the year, as I will be out on vacation with the family. So Next week's broadcast, just looking at the calendar here, just so everybody's crystal clear. Next week is Saturday, 24th. I will not be doing a broadcast then. Probably do something Tuesday. I think I'm going to be in the office these 2 days. We just get too much stuff to get done at first down. But I'm pretty much going to be off for almost 2 weeks. So and keep in mind, most of this calendar, if you guys didn't know, I'm in Florida, Eastern time. So you can set the news accordingly. Always make sure you're checking your times here in relation to the news. That's it for the rest of the year as far as the calendar. Really wouldn't worry about any large news events. But as I've always talked about, the concern I do have is that will this rug pull continue, which is going to catch a lot of investors off guard, obviously mostly in retail. It's going to be, if it goes much further than where we have, it's going to be quite disruptive to the institutional space as well. As I've often joked, and it seems like a broken record here from the mic, about the fairy dust that is this rally, right? So now we're at a very critical point. Some missing notches down here, so I wouldn't be surprised to see us drift into this area. Probably should hold somewhere in this lower range into the end of the year. So it's about 3,700 on the bottom, capping the top of this range off, which we're already in as far as the lower range at right around 3,900 if you want some points of reference. One thing I did want to note, I always try and point out people I follow that I consider smarter than I. Axel is definitely one of those guys. This guy's really, really smart. He's an excellent technician. He doesn't bring anything to Twitter other than his technical skills. There's no BS. There's no, I always try to follow people that, bring true facts to the table and not conjecture, right? So he's definitely someone that does that. It's a pretty decent little lesson on reversal candle patterns, which he's seeing on Bitcoin. So just as a heads up there. As far as what did I retweet that's worthy this week? Fair amount of stuff from Genevieve Stroll's a really smart research analyst from the street. Used to be a portfolio manager, so obviously that resonates with me. Just some points here that came out. If you guys don't know the Kobe SE letters, you guys are really good. Just talking about what's going on with just some metrics that, credit card debt's up there. Look, this is it's a holiday season, but it is my job to bring you the stuff that can impact your portfolio, right? Regardless of what you're trading. And there's some things that, are just really showing up as a concern. And if you guys follow a guy I follow quite a lot, his name is a car dealership guy. He's actually the CEO of a very large dealership group, and nobody knows who he is. He's sort of doing Twitter, at least in terms of the auto purchasing and analysis space, a job because he's seeing some real cracks in the auto market. He talks heavily about that. So you can find him in here. This is the letter, lawsuit against, or not lawsuit, but the indictment against Sammy Boy. You can see some of that. What else did I? Yeah, I thought this was actually interesting from Dan Niles. Dan's another hedge fund guy I follow. Real smart guy. Talking about, Q4 results and stuff, but his his view on the Santa Claus rally has been quite off this year. But so Mike Wilson, I follow him. For those out there, I really do not believe, quite frankly, in the street, with the exception of Morgan Stanley and JP Morgan Chase. Outside of that, I think that both Jeffrey Kleintop, Charles Schwab, along with Lizanne Saunders, are two people that, really just shoot you straight, and they're not really trying to talk their book, right? Much of the street is always trying to talk their book. And you see a lot of this on Twitter. So I really don't follow those people that are constantly just pitching their own book. Like Bill Ackman, Pershing Square Capital, people like that. I want to be, getting opinions from people that at least the ones I follow, put way more time into this. In other cases, are smarter than I in this area, have better insights. It helps me cut the research way down, and I don't have to spend hours peeling through stuff if I trust their opinions on it. And that is let's just say a exceptionally highly regarded. If you've earned my trust, it's wicked rare. And you've done just absolutely exceptional things to earn it, especially when it comes to somebody I'm not affiliated with, or in many cases, I don't even know, right? So I wrote an article for an interview with Money Geek last week. I haven't really written anything in about a year. A lot of people always come to me to ask me to write stuff, and most of these organizations are just a bunch of goofballs. But I think it's pretty cool. These Money Geek guys are trying to be, like the next smart ass that, write a better version of NerdWallet or Investopedia, because it doesn't come with all fluff, right? And you get more hardcore, and I think that's good. Let's see, just FTX stuff. My anniversary on Twitter. Obviously, the Eagles 17 or 12-1. We will stay away from that. Let's go into the charts. Okay, so never seen this before. This is finviz.com. This is a daily chart. Each candle represents a single day. And we are looking at all markets from a futures perspective, right? So across the top, U.S. equities, whether they're size or strength or lack of strength, the size and the, NASDAQ, tech heavy, right? Russell, small caps primarily, Japanese market, European stocks 50, which is kind of like the Dow 30 or the US 30, DAX, which is more of a broad index, very similar to S&P, and then the VIX, which is a measure of volatility and a very important factor when things start melting down. Now, with the VIX, okay, again, this is a daily chart. Notice the meltdown last week, and the VIX didn't really spike, right? So a lot of times when you see the two almost uncorrelated, right? This did spike, obviously, but not that much, right? This big difference. So when the VIX index is up at elevated levels, and I'd say anything closer to approaching 40, right? Some would consider 40 and above to be Armageddon, but we've seen that before in big corrections, more shocks to the market, if you will. But when you have a controlled sell-off and no sort of ending crescendo moment of some rip higher in the VIX, a lot of times it can be a foretell of further loss or further gain, depending on where the market is. Keep a closer eye on the VIX. I'm not going to get too far into it. I think a lot of people are happy to see oil going down unless you are heavy in energy stocks. Again, gold, silver pushing up. Those 1700 area was really just a strong floor to buy from. Now you're higher. Copper. I don't think Dr. Copper's necessarily foretelling what's going on in tech right now. I still think we got a lot of other things to settle out, but keep an eye on copper always. I personally keep an eye on lumber, just because we're considering building a house. Things are getting cheaper for that. So I think the surprising thing to me in the last week from a currency perspective, which ultimately is the lead up to and the end result of all this research, is I would have thought the dollar would have spiked higher, right? It's almost like currency markets have calmed down, understandably, right? If I put this on a weekly chart, you're going to see more of a smooth out and less noise in these charts. But the very simple fact is that the dollar for most of the period of time up until a month ago was going up. Much so, if I put this on monthly charts, you'd see it a significantly bigger move in relation to historical, right? It's been on a rip. Everything else has completely been in a dip, and now we've reversed. So the fact that the dollar has not gone up on an unprecedented move by, I would say, most developed markets, central banks, right, in terms of moving interest rates up to curtail or curve or squash inflation, is kind of a surprise. And that probably tells me the dollar is lower to go. Tough thing about this is that I try my hardest to use all kinds of basic macro research to lead up to a hypothesis or, setting up some sort of, envisioning of what can happen. It's very difficult at the end of the year just because of the factors of lower volume, a lot of big market participants, especially the wealthy ones around the world. From an institutional perspective, they're just not around. So, yeah, that's why you're seeing a lot of this. It's just a difficult time to make predictions or do any sort of prognostication, any kind of diagnosis on where I think things can go. And that's usually why I'll just say, hey, look, I'm probably going to get it wrong. I got it right Monday. We've had the sell off. I don't know if it goes further. I would say, the key is we've just been in a protective capital mode, much to the chagrin of people that, just want to go and just, roll the dice. It's been, for those trying to get long any of this stuff, especially the dollar recently, it's been total snake eyes. So my suggestion is, pull back if you can. If you have the mental capacity. If you don't have the mental capacity to pull back and you're that good of a trader, hey, my hat's off to you. You're better than I. Because when markets get all low and vol and, you just have not a lot of participation, you typically have in the end of the year after a big move like last week, just a drift effect, right? And that drift effect is usually what kills trades, right? You're fighting it. Let the markets come to you. Don't fight against it, right? Especially someone trying to get long before the end of the year in equities, right? But for now, if you do want to do some trading, which, hey, I hope you do well. I hope I'm wrong and that you do, perform well in these markets, but I just don't want to participate. And with that, let's jump over to the charts so you can see where we are S&P wise. Let's move down to the DXY. So I would say on this daily chart here, if you're looking for ranges, we are about 106. I would think caps this. Remember, we don't have a market profile chart for this. I mean, the bottom of the range is about where we are. It's pretty clear to see the 103.5 area. Let's back up here and do the euro. Again, daily chart. Almost perfectly corresponds to the DXY, even though this is not a 100% correlated comparison between the two. You've got the 107 area on the top. Actually, yeah. And then on the bottom, not as definable of a range, but I'd say somewhere in the area of 103.5. Using almost the same techniques I use. Hey, here's something cool. So we're on a daily chart. So let me just expand this again. Maybe it wasn't the easiest to see. Why did that jump? Yeah, let me just remove the expansion. Just because we included another day, 2 days. So when the data shows up in the window, you can see this market profile chart will recalculate based upon where everything executes. I thought this was interesting. Look at this, at least the time frame I've chosen. Don't pull any analysis out this, but hey, look what it perfectly comes out to is where the center line is. Is that a dollar for dollar perfectly? Isn't that great? This red line's a point of control. And who knew? Doesn't mean that this is any measure of fair value, right? It's just this is where all of the volume in this particular set, right? From the, like 14th of June to now, half a year. This is where all the execution took place. I guess no surprise, right? It's perfect parity. So most of the trades took place there. Whether long or short, it's an aggregate on this market profile stuff on the left-hand side. That's pretty cool. Let's go to the pound. All right, so British pound, back to daily. Let's take a full screener. Notice at least in this, and this drops back to a larger time frame. So you can see we do full screen, you can actually put more candles in. So thus, you have a wider field of vision as far as candles, and thus it'll bring more data in. So, but the point of control here for this whole period of time is right where we are. So in terms of an executor and aggregated volume execution, this is what market profile would say to be fair value right here. Take a smaller time frame, obviously it's going to show different. You know, obviously, one thing I was asked the other day, which you can use, I don't have it. I do have it on my other systems. It's what's called a VWAP, a volume weighted average price. And a lot of people anchor these at previous lows and highs. So you can have an anchored VWAP starting right here at the bottom, and it'll run, and you oftentimes will see how things will bounce off that volume average weighted price. You could do a VWAP off of this point, right? You could pull it from here. You could pull it from any of these fractal positioned lows or highs, right? A fractal is just typically something that's an extreme out in a particular pattern. Here's one right here. Tuesday the 14th of June. Obviously the big, absolutely blast blowing out event as far as the bad moves by the British government. That was on the 26th. We almost got to parity. Crazy thing, right? Just know from an institutional perspective, there probably was chunks of the smartest that just stepped in and just bought a ton of British pound, at least up into allowable what the portfolio purchasing parameters would allow. And man, have they done well. I'd be getting out of most of that position, or at least have most of it off at this point if I was in that trade. But that's an excellent move. I mean, that is a year-busting move right there as far as bonuses and stuff. Right. Take a look at dollar Canadian. Remember, we've reversed. So for now, it would seem to be the next hit, if we can break out of this pretty defined range it's in, is this 38.70 area. It seems like where it's what it wants to gun for if the dollar decides to drop lower. So just know that. I know that I'd necessarily be stepping in front of the train to short at this area unless some dollar ripping situation was going to play out. I'm just going to go through the rest of these pretty quick and we'll be done. I want you guys to take a look at these. Are all daily charts. Tight range, Aussie, US. Just imagine the value erosion that has taken place in most of the Canadian pairs. Crazy. This is probably the biggest move of the week in currency land. It's ripped right up. This is probably a Q clearing move You've hopefully talk about that. It's a queue clearing move. This is one of the few times that I actually, in obviously this late last week, it's not just the the strongest argument from a seasonality perspective, but these queue clearing moves are the few times I will actually step in front of the train, because they just went up and blasted just pockets of stops, right? The other thing that was probably worth it is notice this wasn't what's called an initiative move, meaning that, and this is just more auction market theory, AMT stuff. You can Google, you can go to my website, fxestrader.com, if you want the glossary on this stuff. But initiative activity is essentially an institution or a group thereof other time frame players, right? Essentially not retail. Although there can be a large group of retail that sort of piles on, they typically won't make the initiative move to take something out of a range and move it higher, right? An initiative move would have a lot higher volume associated with it. Does that make sense? So like if this was higher and then it came back down to the area and it held, right? You could even bounce along this move for a day or two. But typically, if you're going to get long, right, that quick short trade, I'll, just be a quick rip lower, right? But more than likely, it's going to hang here. And in a market where there's lots of participation and volume liquidity, that's when you don't want to be short, right? You just want a quick hit on the short. You want to be long right here, because if it holds, it's going to start one time framing higher, just ripping away from that. And that tells you if it's a company with volume. There's other factors you can certainly read about on that. You never want to be in front of that. You always want to be hanging on to the coattails of that type of move. What are the OTF players doing, right? It's weird how these columns don't show up as great anymore, huh? Just get the whole thing just gets sucked up in here. It's almost like it should be like this. Looks like this got moved. You never see me get that straight. GBPCAD, Neo. No, Neo's off the platform for a while. Hopefully those guys can get everything straightened out and recalibrate and get it back on. Notice the opposite move here from the one we saw. Look at this thing. It's crazy. This is just whack. Take a look at this on a weekly. Jeez. Take a look at this on a monthly. So where do you think we're headed? I mean, if this is not a great example of why this is such an excellent indicator on this chart, it's called a squeeze zone. I mean, look at this. We came right up to it. Now, arguably the 200-day, which is monster on a monthly chart. I mean, this is like, it's almost like a halt and reverse line. Look at it. It just perfectly went to it. Boom. Didn't find any initiative activity above it. Obviously, this is probably, a good chart for illustration purchases, but there's a lot of other pin action that takes place before I would even think about this move, right? And there's like 4 other currencies I would analyze even before I got to this one, right? But if you were trading this, which I don't think anybody I know does, forget about the pairs, right? Use it as a a learning lesson, if you will, on longer term charts like a monthly or weekly, come up against these big areas. You wouldn't want to be that person that tries to establish initiative activity because it was a complete resistance point. It just ripped right back down. So in many of these cases, it's going to go to the other side of the range, right? Not immediately, and I don't know when, right? But I will typically make it from one side of the range to the other until there's some sort of initiative activity to break it out of that range. Let's take a look at the crypto daily. Let's reset. So this is kind of what Axel was talking about as a reversal pattern. Whether or not this blows through the bottom, I don't know. Right? So does the move of Bitcoin. It seems like when it's just risk off, right? The correlations have become quite evident. Anytime risk goes off, typically this goes down, right? And the reason that should be a flag at this point is you notice with the whole rally in equities globally, at least in developed markets, of the last month, it didn't participate. So it didn't participate in risk on, but it has participated in risk off. What's that tell you? It's probably a bearish flag. And with that, I will wish everybody a fantastic holiday season. Merry Christmas, Happy New Year. I will see you next Tuesday. Remember, family time and, putting in the, FaceTime, if you will, with the in-laws, even though you may dislike them. Thank God all my in-laws are cool, but I get it. Is a lot more important because many of these people you may never see again. So with that, I wish everybody a great weekend. Happy holidays. Drink some eggnog. See you on Tuesday.